Were you aware that there is a stock larger than Tesla that will probably increase in value by 100 times? If you think this is news, be sure to keep watching and listening to which stock is referenced. And people are eager to put their hard-earned money into equities that have the best possibility of performing well since they have access to so many resources. One of the most well-known stocks on the market, Tesla, has also done fairly well throughout the years. But there appears to be a stock that could surpass Tesla in size. Indeed, it might even exceed 100 times. Watch today's video to learn which stock, which seems to be larger than Tesla, will rise 100 times. It might come as a shock to some to learn that another stock could outperform Tesla. Guys, as the majority of you may already be aware, the firm is a leader in the automotive and clean energy industries. She told Cathie Wood everything she knew about the aforementioned stock in an interview. For those who do not know, Cathie Wood is an American investor, the founder, CEO, and CIO of ARK Invest, as well as a famous stock profiler. With $60 billion in assets, ARK Invest is a reputable investment management company that makes bets on cutting-edge technologies like genomics and self-driving cars. Wood claims that self-driving cars are robots. In this context, she made reference to the way that robotics is usually and historically seen. Teradyne is the top choice. Teradyne Inc. is an American company that designs and manufactures automatic test equipment specializing in the creation and marketing of automated test systems. Teradyne expedites the release of superior innovations onto the market, including data storage systems, life-saving medical equipment, and smart devices. Many individuals are still unaware that Teradyne works in the robotics industry, particularly after they purchased Universal Robots in 2015. Located in Odense, Denmark, Universal Robots is a Danish company that produces cobots, or smaller, more flexible industrial collaborative robot arms. Although Teradyne's total income still includes the acquisition of Universal Robots, industrial robot costs, especially those of collaborative robots or cobots, are predicted to decline over the next several years to between $10,000 and $11,000 per robot. Cathie also discussed the significance that 3D printing plays in the modern world during that same interview. She brought up Materialize, Proto Labs, and Stratasys offers. Stratasys offers comprehensive polymer 3D printing solutions for design, production, and healthcare applications at every stage of the product lifecycle. Proto Labs is the world's quickest digital manufacturing source for low-volume production parts and custom prototypes. Parts are produced in a matter of days using industrial 3D printing, CNC machining, and injection molding technology. With over 30 years of experience in 3D printing, Materialize offers a variety of software solutions and 3D printing services. Wood noted that the automotive industry has historically hindered 3D printing, and that the aerospace industry is currently doing the same. However, she went on to say that opportunities presented by crises can spur demand for 3D. Her response when questioned about the current state of 3D printing and if it will truly take off at this time was, yes, it is. To answer your question, it is located in the Valley of Despair due to their concentration on the consumer market rather than on the industrial market. Many equities have dropped between 80 and 90% from their peaks. Wood continued by stating that the gross margins of aerospace corporations such as Boeing and Airbus are between 15 and 20%. She claims that since 3D printing is approved by the Federal Aviation Administration, those expenses can be reduced by up to 90. It can also reduce the number of parts, the weight and form factors of the different engines and parts. Wood came to the conclusion that given the current upheaval and difficulties the aerospace sector is undergoing, it is likely that they will look more aggressively for some new technology that will enable them turn a profit again. When questioned about the viability of this endeavor and her partnership with the 3D space, Wood responded, definitely, it is absolutely feasible. She continued by saying that there was a period of time when the FAA was really worried and felt compelled to carefully examine every component and substance. However, it started to accept 3D printing more when it saw proof of concept and success data. It's also likely that new materials may be approved and more businesses will begin offering services to the aerospace industry as the FAA has begun to notice the strain that aerospace companies are under. Do you think that this stock actually exceeds Tesla in value? Please share your thoughts with us by posting a comment below. To be clear, 3D printing, also known as additive manufacturing, is the process of creating a three-dimensional object from a CAD or digital 3D model. can be carried out in a number of ways, usually layer by layer, where material is added and deposited, connected, or solidified under computer supervision. The automotive and aerospace industries were not the only ones to benefit from 3D printing technology. Other industries also saw changes. One sector where 3D printing has had a significant positive impact is medicine. In actuality, 3D printing is used to create almost 95 of hearing aids worldwide. There are even rumors that 3D printing will soon be used for medical applications to create highly customized hips and knees. Regarding plans to add short positions to one or more versions of her funds, Cathie Wood was also questioned. Wood responded saying, well, we have internally for staff members exclusively. We are beta testing a portfolio that, if you can believe it, is truly ARC on steroids. To make sure that everyone is aware of the 5-year investing time horizon, we want to try it out on ourselves first. She continued by saying that because they are concentrating on shorting stocks that are part of the major benchmarks, their time horizon does not take the day-to-day into account. Portfolio managers and analysts typically retreat to the stocks mentioned above, move closer to their benchmarks, and sell off stocks that are either completely excluded from or only partially included in their benchmarks when they find themselves in a risk-off scenario. However, Wood has lately picked up stocks. So this is a wonderful opportunity for them, as it's just a risk-off move to get closer to benchmarks. So we think the benchmarks are where the big risks are long-term, because they are filling up with the value traps, those companies that have done very well historically but are going to be disintermediated and disrupted by the massive amount of innovation that is taking place. Wood said, what is a benchmark? A benchmark is a standard by which an investment manager's mutual funds or securities performance can be evaluated. For this aim, broad market and market segment stock and bond indices are typically utilized. An excellent benchmark will be predictable for investment managers due to its straightforward set of public regulations. A solid benchmark essentially represents the investing universe of a strategy and, consequently, the risk and return characteristics of that strategy. This indicates that having precisely stated underlying securities and their weights may be one of the benchmark's advantageous characteristics, according to her. The cost of truly disruptive innovation in the open global market is estimated to be between $10 and $15 trillion. In 10 years, those figures may even rise to $200 trillion, meaning that it will go from slightly over 10 of the total value of the world's equities markets to an estimated 50 or higher. According to Wood, the degree of disruption is evolving to that extent. Artificial intelligence, blockchain technology, robotics. Energy storage and DNA sequencing are cited as the causes of this. To ensure that S-curves feed S-curves, all of them are convergent. And a chart known as an S-curve is used to explain, illustrate, and forecast how well a project or company will do over time. To be more precise, it is a logistic curve that uses a relationship with another variable to illustrate the evolution of one variable over time. Cathie said this to wrap up the interview. Investment time horizons of 5 years are crucial. We believe that the next 5 to 10 years will be great. Is volatility expected? Since ARC is already a risky approach, as you point out, we advise keeping an eye on the reward. In 5 years, we have invested in all of the winners and disruptors who will upend the status quo, and the world will not resemble it does now. Please visit our channel, view our other videos, and hit the button if you love this one in order to see more of it.